How to achieve high returns taking little risk? A question that I get asked all the time, and I'll attempt to answer this here today. Like you, I've been on the hunt for the Holy Grail of investing and trading for years, but I've yet to find it. But what I've found is that what does work, and I want to share this with you today. Firstly, let me start by saying that having zero risk is impossible, even if you've got all your positions fully hedged, especially if you want some decent return. So our aim is to not have total zero risk, but to seek high returns with minimal risk, as opposed to having no risk, and always be prepared for that black swan event. That is some unexpected event coming out from left field. This is where my previous video about personality and how that relates to trading success also relates to risk management. The amount of risk management is also subjective, although there are maximum parameters that you really don't want to go beyond. Everyone is different. There isn't really a one-size-fits-all, but some, for example, don't mind taking big risk to make potentially vast fortunes. However, I do believe that for most people, including you, would definitely not want to risk everything, especially for a slightly higher return. Although I understand risk, I hate risk, and I seek to always minimize it as much as possible. So here are the following 3 things that you can do immediately to reduce your risk in trading and also investments, while also achieving a satisfactory return. 1. Position size. What do I mean by this term? It simply means and answers the question of how much. That is, how much do I invest or trade when I see an opportunity in front of me? Do I put all my whole account into this one investment opportunity because it's a sure winner? Of course not. The lack of position sizing will be the number one reason why both traders and investors fail at their endeavor to create any significant long-term wealth. So begin by reducing your size of trades or investments going forward, and this will dramatically cut down your risk right away. And 2, diversification. Some would say that you should diversify, while others say that you should focus all your eggs in the one basket and then watch over them carefully. I really say that it depends. It depends on how much experience that you have had with the markets and also how much capital that you've got. For small capital bases such as $5,000, then dividing up your account into 15 different positions wouldn't actually make sense due to the high brokerage costs. But anything, say, for over $25,000, you can easily begin diversifying. And then 3, stop losses. I know a lot of people, including you, may actually hate them because you've been stopped out before, and you hate how the market seems to know your price, and then it stops you out just before the prices actually go back up. It's happened to me before. But I just want to tell you that for those few times that it has happened, there are many more times that you would have had much more greater losses without the stop loss being in place. You've really got no excuse. They are easy to set up, and it does protect you from devastating losses when things do go wrong. So review your position sizing, review your portfolio diversification, and review or implement stop loss rules, and you will be on your way to safer and consistent returns. You'll also sleep much better at night. I hope that this really does show how you can easily reduce your risk by simply implementing the 3 things that we spoke about to achieve the extraordinary returns but safe returns. So be the tortoise, slow and steady, and let compounding perform its miracle. Hey guys, it's Terry. Hope you liked this episode. If you did, you can do 2 things right now to continue your journey. Firstly, you can subscribe right here to my channel, which will allow you to receive my videos on a fortnightly basis to help you in your investing and trading journey. And secondly, you can go to my website and get my Fast Start 10-step stock checklist and video lessons for free by simply clicking on the link right here. So if you'd like to do that, just click on any of the buttons that you see here. I really look forward to seeing you on the next video and showing you even more tips and tricks to achieving consistent investing and trading results.